Hello and welcome. It is the 7th of December 2018. My name is Derek, and in this video I'm going to go over a very simple trading strategy again, which is, again, using simple mathematics in trading a coin on the double up and the 2x moves. Before we do that, some things in the world are just very predictable. It's predictable that, these types of up and down moves are going to consistently happen. Whenever you have a huge up move, you're going to have a very big retracement. Same thing when you have big down moves. And that, well, we'll see how the next up move happens. Of course, if it is, but it just seems too predictable that it will. It seems too predictable that if I put water in the freezer, or our current weather in southern Ontario outside right now for a few hours, it'll freeze. Very predictable. It's also predictable that there will be more points in the National Football League this season. For on the end of August, at the end of August, I made a video about the NFL metagame changing. And these are the points scored since the history of the NFL going back 100 years. And I just find this an interesting chart, but the 45 handle here has been a very big resistance, and 45 represents the total amount of points scored per game in the National Football League. And at the 11 minute and 22 second marker, 7 seconds before the end of the video, I basically finished off the video stating that, well, I expect this year's number to go very close, or to be at around the 49 number. I then downloaded the data of how teams have done this year. 18,450 points divided by 2, 9,225, have been scored in a little under 200 games for an average of 47.8. And the best it's probably going to do is inch above 48 with only 4 weeks left in the season, or 63 games remaining. But technically, that was a correct play, or a call. I mean, you can bet this, but this level of resistance, well, right now it's at all-time highs. This is the most points in an NFL season that was ever scored. So that prediction, will this be a record for most points per game in the NFL? And yet, yes, it would be, and so far it is. And that was predictable based on many different factors, mainly including, of course, referee rule changes. But we could also make this. I'm making the same assessment with fiat currency. It's just a matter of when, not if, of course, it goes through. So until then, I believe, and it might be a decent amount of time until then, before that things implode. And how cryptos react will be very interesting. I think they're going to continue to do fine as we move into the 2019 year and 2020. But when you see cryptos having moves like this, and you've ever heard a thing about profit from volatility, well, let's go back. And this was an interesting move, but I'm not going to count it though. But I'm going to go back in time to the early days, and this is the daily term time frame. So I'm just going to scroll back until we can see here. And this market is at 4,000, just cruising on and crashing. And you see the volatility goes down to 1,000, and you think for a second, oftentimes within these markets, they just have big moves. Why don't I just go ahead and buy at 1,000? If it goes to 2,000, I'll sell half, and then if it goes to 4,000, I'll sell half of that, and so on and so forth. And then if I buy back, well, if I'm going to sell 10,000, I buy back half the price. I'm going to buy back about 20,000. Okay, well, let's see how that play would do. So some smart person comes in, some sharp person, and makes that bet, plays through the market, sees that they don't do anything. Well, these pierces are only good for 20% moves, and there we have it on this day alone. So April the 18th, 2015, the price action goes to 2,000, but it doesn't go to 4. You'd have your sell order for 4,008, 16, 32, all the way through. Buy order at 250 or 500, 250, 125 maybe. But you'd be able to sell it to. Now you're not buying it back at 11:30 because you're waiting for 1,000. And by the way, another spoiler. There is going to be a few situations here where it's a little unlucky, including now, because you're waiting to buy back at 1,000, but it's not going to get there, not anytime soon. That is, because the next day it did just that, and the next day it did that. Oh, maybe now you might get it. But we take a look at this low. We got oh, it did hit 1,000. Okay, it didn't hit immediately, but that. So now you buy at 1,000. You sell at 2. Okay, excellent. So now we're going to either buy at 1,000 or sell at 4. And there we go. We hit 4. But we didn't hit 8 because the high was 7,410. So now we either sell at 8 or buy at 2. And it doesn't go anywhere there. This high doesn't reach. It goes to near 7. Doesn't count. No buy order trigger. And now it's going near 2. Did we get the buy in here? Well, the lowest point right now is about 2,100, so not even close. How about this low? Did this go through? It did. So there's a buy at 2,000. So now you're looking to buy at 1,000, sell at 4. And we just keep scrolling through. And there we go. It goes below 1,000, so there's another buy. So now buy at 500, sell at 2,000. Down to 760. Below 7, not quite. Below 6, but not quite 5. Again below 6, and there we go. Didn't get to 5, came close. A little unlucky, but you know what? Overall, I mean, the results are going to be phenomenal for these when I put them up after I'm done. But 1,000 gets sold. No, excuse me, no. If you bought at 500, 1,000 would have been sold. And then that pierce does nothing. And there we go. Now, this high is 4,176. So this time you got lucky because you're selling at 2,000 and then at 4,000. And then we can see it goes right back to 2,000. So there's your first buy. So now we're waiting to sell at 4, buy at 1. It doesn't get up to 4 close. But here we go. This is a massive gain. It goes to 4,000. It goes to 8,000. Does it get to 16,000? I see over 18,000. Yes, it does. 3 sell orders in a row. And then right back down to like, we got 4,900. So 8,000 hits. 4,000. Does it hit here? Well, it looks like it will. There we go. 4,000 buys. 2,000 would buy, I believe. Nope, not quite. Yeah, this one here. 2,000 hit here, though. We can see it went below. And then it goes up to a high of 98.50. So buy 4,000, buy 8,000. Or excuse me, sell 4,000, sell 8,000. And then buy back at 4. Not yet buying the 2 number. But it looks like here that it did 1879 low. So you buy at 2. So now we either buy at 1 or sell at 4. And then we just move on. By the way, we're in 2016 now. And there would be 1,000. And yep, there we hit it. So now buy at 5, sell at 2. Neither happens there. Now it's at 578. And there we can see it goes to 512. Not quite. And interesting here, when you see these types of days, you can profit short term when you notice the pattern. If you started to notice it like here and here, you got 1, 2, 3, 4, 5, 6, like 7 days of like volatility of like 20-30%. So just a side note on top of this. But as we're waiting for 500 or 2,000, we can see the 500 hits. So now it's 1,000 or that of 250. And it gets close to 1,000. And now it breaks 1,000. The high was 1880, so the 2,000 didn't get hit. A little unlucky because it was pretty close. It got to the 18.8 handle, so you only needed at that stage about a 6% gain to get there. But nonetheless, you still managed to get that sale in at the 1,000 handle. So you'd be selling at 2, buying at 1. And there's your sell at 2. So selling at 4, buying at 1. So there's your, and right here we can see it goes to 1,000. So there's your sell at 2,000. So now it's 4,000 or 1,000. This high here, not quite. This high here, not quite. This high here, it gets up to 38, not quite. This one here gets up to 38, and we can see that it gets down below 2,000, which is, you don't buy. You would have bought back had you sold if it got to 4, because you're waiting for 1,000, of course. And it's getting closer here. We've got down to 12, 11. There's your buy. So now we're waiting to sell at 2, buy at 5. We're now in 2017. Waiting for 500, not quite 600, and again, a little unlucky not to get the buy. But you know what, though? How lucky to get the sell at a high of 32.16. Well, 2,000 you get the sale on. That's all you get is a 2,000 sale. So now you're buying at 1, selling at 4. Not quite making it to 1. Does the 4 hit? No, 39.90. Does it matter? Does it hit here? No, 37.32. Does it hit here? 3,900. Now down to 2,000. Almost. Well, it did go to 2,000. So that, unlucky. You almost got the 4, and it did go back down to 2. We're waiting for 1,000 or 4. And we wait, and now finally our 4,000 hits. Waiting for 8,000 or 2,000. We're now in January of this year, so you pretty much know what the story should be with buy orders. There's your 2,000. Next up is 4 or 1. And don't hit it there. This high here, 38.99. Near. This high here, 39.39. And we continue on into April. Down to 2,000. And then it almost goes to 1,000, but not quite. We can see a little unlucky here. And then as we now go into July, we got her down to basically, it's done. I mean, there's nothing more going on. 500, it's gonna hit. I mean, we just go to the, scroll it to the end. Yep, there's a 500. So therefore, these were the trades that I calculated. I put them into a spreadsheet and went with the buyback 100%. So if I sold 1,000 at 800, I'm buying 2,000 at 400. And within the spreadsheet here, I have all the numbers in here, starting off within 0.1, buying 10,000. For now, there is not going to be any rake, but I did calculate it to see what it would approximately be. So you buy 10,000, then you sell 5,000 because market goes up, and then you sell another half for 25. And then when you're buying back 0.1, you're going to get double. And you buy back here, you're going to get double. Then you sell half, you're selling for 17.5. And we look at the size of these numbers. It goes from 17.5 to 26.25. And then it goes up to 68. And then 120. And this is a buyback from a long time ago. This was just an interesting thing because this buyback here occurred right here. And then this was lows not seen. This is why it's bold. So I just bought what you already owned, cost a half a Bitcoin. I thought that was a fair price based on where you would be at that point. And continuing on further, that was the only time you ever had to put in quote unquote more funds. And then we have this in here, which is selling 107. Then this goes up to 161. Then 242. And then buying back cheaper prices, buying back these ones in here. So it worked out that you would have ended up buying 11.84 Bitcoin worth, selling 12.55. And the net Bitcoin was that you would have 0.7 Bitcoin, Feathercoin value of 2.9, and the overall value of 3.61, paying 0.06 rate. So basically about 36 times your investment back. And when you look at different coins, you got to think which ones are capable of having those spectacular moves that just keep on going up at like sick rates. There's a lot of them out there that do, and they're the ones that would be more in favor of doing such. Now let's take a look at Feathercoin on the spreadsheet that I made a few days ago. But before we do that, I think it's just safe to say, I don't think it's right to say you're up 36 times. You kind of are up 18 times because, or actually, you put in 0.3 here, so I mean, technically, you put in 0.63, you would be up like 0.6 or 6 times. And if you didn't have this buy and you said, okay, I don't have the funds to do it, and you just don't make this transaction, then yeah, you'd be up about over 30 times or 27 times if you didn't have that transaction. And I start this off, and what I have is every time the market doubles and goes in half, then the buy and sell works out. Now this is different. You're always trying to just accumulate Bitcoin in this example. And that means in this case I would have bought about 800,000, selling about 630. So buying for 11, selling for 17. Interesting that came up as an even number. Buy average in at 1400, sell average in at 2690. Portfolio high, at one point the portfolio was worth 8.66, ending at 6.68. The portfolio low, at one point I was, you'd be down 100%, it was a little over. And the AOD adjust, that means if all I did was at the end of the day, sell or buy to bring it worth 1, as long as it's a 1% differential or more, then I would be at 5.12, which is pretty similar to, a little under even that too, of the 6.684. So let's just change some of these numbers, put some shorter term variables in. Say if you sell for 50% moves originally and then double if it goes after that, the portfolio goes from 668 down to 708. I'm going to put this in bold so we can, because this is what the key number that I want to adjust on. So now let's adjust the buy equivalency. Now if something goes up, say from 100 to 150, that means at 1/3. So 0.67 would be of its equivalency. So if I put this in, it goes from 708 and it actually goes down. Now let's change it up even more shorter term. Let's just assume that you want to go for 30% sales. Then it stays around the same, a little higher from the last. And let's do maybe 75% or 25% pullback, a little over 7. Either way, it's gaining about 7x, 6x. If I maybe reduce this to say 1.6, it would be a bit better. Maybe move this to 0.6, a little bit. Now if I say I want to aggressively sell when it goes up, say sell to and I just thought of something. What I thought of is when I sell this, what I mean is if I'm selling this to say 0.98, that means if it's worth 1.3, I'm going to sell 0.32 worth. This number goes from 7.082 to 6.89. But what I was thinking was, I think normally you sell the 1 on your buy on your sell 1s, but on your sell 2, that's the one where it should be like 0.9, 0.8, because when they just, in this case, if the market goes up 30% plus an additional 60%, it did better than double. There's a very good chance you're going to be pulling back after that and able to get a much better buying opportunity. So that's some of the things of note. Now, if we go really short term, like say 15%, it goes to 6.78. If we put this like say 1.33, even down a little bit more, making so this is correct as well. Let's just put this at say 0.77 will be a good number, and then say 0.86. So up to 7. And if we sell this to say 99, it would be worse. If we sold it at 101, it would also be worse. So just the base playing of doing this sort of stuff works out. But when it all comes down to it for this strategy, when you look at these two numbers here, again, you're making 5 times your profit on a market that actually went down half its value. Because actually, what did this one start at? Yeah, because the first example, it lost half its value. I think this one was much higher. That would be 6,000, I believe. So that would be a loss of 12x. Yeah, 6,000. So a market going down 12 times, you go up 5 times, you go up 7 times, maybe 4 times, maybe 9 times, maybe 20, or I don't know how much. Well, with arbitrage, who knows? There's just so many different ways you could increase these numbers. Again, for volatility, I think the best way of playing it is within the market at the time, the best as you can read it. When you see that volatile times are around, and then you're going to go after it. Right now, we're seeing these moves go from 500 to 628. So that's like 20% moves, 15% moves. That's all you're going to be able to get right now. Maybe your 30, 50, 70, 100% sellers might hit. But when we go back to different days, and I'm going to put this on the 4-hour time frame and just go way back to some of these glory days, if you will, of previous years. Well, previous months, rather. See, when you're in situations like this, you can see your volatility on here that, oh, breaking this resistance, you can just even tell, oh, we can be going for like, here, 28 to 34, that's like 20-ish or so, 20 or so percent moves, and the breakouts could be much bigger. You can play for, and in here, you see, this is the easy one. Whenever a market's high, you know you can get good pullbacks. Because in here, when you sold this, and you're looking to buy back near the 18, and you're selling near, say, 25, near that top, or at least the market goes from 25 down to 15, not quite half its value. And in this here, this goes from 38, and it ends up, well, not going quite down half, but it's still a decent decline, and there we go, going from a big move, half its value losses. The volatility is always in play that way. And at the time, there was nothing to say that there was low volatility coming into the markets like we've seen for the majority of the year. And a lot of it is the waiting game. If you have to wait even 6-8 weeks while the market just does a whole bunch of sideways stuff, then your portfolio is not going to change much. It's just going to go up or down a little bit amongst your, at least that sector of your investment. It's only going to go up 5% here, down 5% there, and I mean, that's like nothing. So you just let it do that thing. And then, of course, when it goes up, it's going to go a lot higher, and you're going to protect a lot of them when it sells, which is nice. Your portfolio is higher. And then it goes down. You don't take that hit as much when you sold half your stack or 20 or 30% as much. And then you end up buying. And then when you have markets that do like these sideways kinds of ranges like we would see here, if you're trading the buy low, sell highs in any form successfully, you should be seeing a trend something similar, maybe to not that rate of ascent, of course, but some sort of rate of ascent moving higher than that would be. So that's that rate. You might be going on a different rate of ascent. That's always about outperforming the market. Thank you for tuning in, and have yourself a great day.